Hey, it's Mack with PriceActionTradingSystem.com, and it's Thursday. It's May 22nd. This will be our chart lesson for today. Um, Typical range day. We have broken out of the range. We came back and tested it a couple of times and then went higher. Um, and right now we're still in this channel that's working higher. I don't see any break of that channel yet, so I don't see any reason to be thinking short yet. You might be a little bit leery about going long here, although at this point, I would be, I was looking, there was a measured move there to there. So that was on these trades, I was looking for a move to at least here, but you see we've gone much further. And what I'm thinking is probably going on is this is the first range, something like that right there. And so that may be our next target. I would be thinking of something like that right there, which gets us up here to 1897 or so maybe. Just see what that is. 1896 and a quarter to be exact. So that's what I would be thinking if we continue working higher here. But I don't see any reason. Uh, this trend is still working higher right here. So and the bias is definitely up. Understand this because people get confused on this. Yes, this is a range day. The bias is still up though. We traded up into this little range. And so even though this is a trading range, the bias is still up. Excuse me. Um, and there is kind of a midpoint in here. It came into play early with this. What happened was this got a little bit tighter, but here was your overnight low. So that's what I was expecting prices to reach. And you see we did reach that, and you got a nice long off of that. This one's kind of the one I was concerned about because it's coming right back into that resistance there. Although it is a second entry long coming off the lows, and there's a good chance we might go back and test the highs, and you can see that's right where we went to. So, well, let's back out just a little, talk about the trades. Not a lot of trades today, but some fairly decent trades and fairly easy ones to see. So we'll talk about these, and then there's a couple other things we got a little more time I'll talk about as well. First trade I saw, it's a little aggressive. We got a little channel working down here, and you figure we're working down to here. You get your break, and so the first thing I'm expecting is this, to move on down. That is a first entry. We're kind of coming out of some. This is a little bit congestive, um, so it's like a breakout pullback short almost, but it really comes back and tests these high. But you can see all those stems up there. I figured we're probably at least going to test these lows down here, but we're probably coming down here to make a new low based on that little channel working down. And but it is aggressive because it's a first entry. You're better off to wait on this entry, and you can see there's a big bearish bar right there. It's a second entry short. It is kind of an inside bar. I would have liked this even better if it would have broke lower right there, but it did break. It moved so quickly that you could actually use a limit order in here and get a better tick than a stop. And what scared me was when it bounced right there. I thought it was going to be a trap similar to yesterday. And that's what they'll do. They'll throw something at you, and I guarantee you, I didn't get any emails saying it, but I guarantee there's a lot of people that probably skipped that trade because of what happened yesterday. Now, whether or not they went long, you definitely don't want to go long here because you're right back into this resistance. So just sit tight, and when this thing turned back down again, now you got a failed second entry long. Notice that high there, pull back first entry, pull back second entry. So now you got them trapped, and that's generally what it takes to get that last push out. And you can see we pushed down to a new low, and I believe it's a new low. One tick. Notice that one tick down there. I love those setups because they trap so many traders on the wrong side. And I like going long right there with a stop. I mean, this is very rangy looking, and this is really a failed break out of this as well. You could look at it like that. Notice all those lows across there, and that could have scared you out of that trade if you didn't understand that. Hey, we're looking for a retest, and that might have scared you out of it. And if it did, but I still think it's a good trade. Um, for the reason it's a failed second entry long. So, and that's what it took. It took a little trap because there was a lot of buying in here. But the rules played out. There's your channel working down, your break. Two tries to go higher, and then we drop on down. And then you get, this is the first correction you get, but you got to go long right into those highs. So I would definitely use a limit order. If you use this one, you see it would have come back on the second bar if you didn't get filled on the first bar, which I don't think you would have. At least you wouldn't have on my chart. It had to come back, and then it shot on up, and then you got to assume, hey, we're going to the upper side here, and that's exactly where we got. And then you get the first break, attempt to go higher. It's a first entry. You don't want to go long on that first entry that close to a double top. So you got to wait on a second entry and see what happens. And this was so tempting to enter right here, but you couldn't enter below this bar. So you had to wait on this one, in my opinion. There is a trap there, but on my chart, it doesn't look very good. So I think you have to wait for this bar. And then you're right in the EMA. You're right in the middle of no man's land. I don't even know if a stop would have worked there. If you enter there on my chart on the stop, you're in at 87, and yeah, it worked easily. It is real aggressive. It's coming off the high. It is a trading range, but I just was really scared of it. I didn't like it. I went another trader I talked to occasionally. He's done a lot of studies on time reversals and things, and what he's found, and I'm not going to go into a lot of details on it, but what he's found is that there's certain times, there's the opening morning, which is 8:30 on my time reversal right here. There's usually a trap and a reversal, and then there's usually another one at 9 o'clock, and I think 10 o'clock, and this was the 9 o'clock one. And there's a couple of different times that these things automatically reverse, and it's there, but the thing about it is there's always price action reasons to go with it. So if you combine them together, they work really well. So if you're following those times in this, that might have led you to take this one on a stop right there, and then you get out easily. But I think you had to wait on this bar to follow the price action rules, and then it's just not a good spot to go short. It did work, but you see it didn't go very far, and then it reversed, so it could have easily broke a tick or so lower and trapped you and gone higher. So I just think it's real aggressive unless you were treating it like a trap and went short right below those two matching lows there, which you might not be able to see real well. Let me get that out of the way. But you can see those two matching lows. It broke higher and it immediately reversed. And that's how a good trap will act. It reverses so fast and it closes, and then it ends very bearish if it's a long trap, or if it's a short trap, it'll end very bullish, kind of like that one did right there. And then you get your second entry long here. But what I liked about this one was you got all these matching. You got all those matching lows, and it broke lower and turned and went out the other side. Just, put you a stop right there. And at the very least, wait on this bar, let it break higher, and use a limit order. It's a possibility you didn't get filled on that one, though, because the entry really triggered when it broke higher above these matching, because it went lower first, and that's what trapped people. Weekend traders love to get trapped at the lows of the day right in here. That was the second low, another low at that since 9 o'clock. That's where weak traders are. If it's trending the other way, they get trapped at the highs. And so weak traders are notorious for that. So those are always good traps. And then you get a little pullback. I don't think you want to go long right there out of that. Then you get a failed second entry short. So you might have considered going long there. But then you're right back into this double top in a range, and I just think it's risky. But then all of a sudden you get another attempt to go lower. So if you're counting off that high, it's a first entry, pull back, it's a second entry, and now you kind of got something to clarify your trend line. And so I liked going long there, because I think what happened was not enough people were willing to accept this trap. It was getting in too high, but when it comes back again, I do think you need to use a limit order here, which I took this trade and I used a limit order, and it took a while to work out, but it did work out. And you got another bounce here, but again, you're right back at the high. And you know, I just, even with a limit order, you don't, but it just probably trapped more shorts that are trying to get short off this high. But what keeps you out is drawing this short-term trend line. I originally had it drawn just a little bit steeper, and I thought maybe we had a break here, and maybe we did, uh, because I think I originally had it like that right there, and maybe we do have a break. So I'm not, but I adjusted this a little below those closes right there, and it does seem to fit pretty well up through there. So this could be the first break right here. So just be careful. I wouldn't be going short in here till I get a confirmed trend line and know we're working the other direction, because the bias is still up. And so anyway, then you get a two-legged pullback, and that tests this breakout area. It holds and goes up. It's also off that trend line. Um, I think this one's a little bit aggressive because this signal bar is not very good. So you would have to use a limit order. I still think even with a limit order, it's a little aggressive. I think you need to wait on and let it try to test it again. And then you get your double test of it, and then you get a bullish bar. You're going long at the highs here, but you know that there's going to be people trapped here because you've got two legs down, and then this is your second entry counting off the low. So I liked it because it's like a trap. And you can see that trend line holding, the EMA holding, the previous resistance has acted as support, and we tested it a couple of times. It held, and I was looking for that measured move up to right in here, and so that's what kept me liking it to the upside, because I'm thinking we're going to get a measured move, and so it's going to move on up there, and there's room to get out. And a lot of times, you know, I usually measure it from the low, but a lot of times if you use those closes, then look how close that, I think that does get you to a measured move on the closes on the upside. Within one tick anyway. So, but, you know, just keep that in mind that you'll see that from time to time, but I always still measure it from the low because you want to be conservative. You know, you want to get out just in front of that, reaching that high if you can. And you can see it found resistance, but it found the upper side of that trend channel, and then it went a little bit higher, and then it turns down. And we did get a little overdone there, and then we kind of overshot it, the same on this side. And we'll see if we get a retest with a new high or not. This, you know, I might have had this right the first time, coming right up through there, and we may have had a little break right here with a move to a new high. So just be careful going short until you get something working in the other direction that's confirmed. And right now we've just got a couple of swings really, and nothing's really confirmed. It looks like it right there, maybe. Just not enough price action right there to really make me feel like that is exactly right. So it could be a little steeper, and we got a break and a new low now. We could run on up. So just be careful right in here. And that's really what I saw today. I wanted to share a couple of things. Let me pause it a second. Okay, this trader sent me this chart. He did see the long right here. He's seeing this channel fairly well here. And he asked me about this trade right here. That was the long. Notice that it went lower on his, but it didn't break out the upper side. It's still a nice reversal bar that closed on its high. If you used a stop order here, you may not have had time to get it in. So you might have had to try to use a limit order where your stop would go. But he was basically asking me if I thought this was a good trade. And I think it was, based on what I showed you on my chart, because it is in the middle of a range. And a lot of times you got to be real careful, but it's not real choppy looking in the middle of the range. It's a nice move up and then a nice move down. And what you're looking for is you're still looking for a retest of this channel, in my opinion. And you've got your midline. It's just a bounce off the midline, the middle, and you can see the reversal in the trap there. Just notice the new high, pullback first entry, pullback second entry, a nice signal bar. It was a better setup on my chart because of the trap, but I think there's enough reason there to go long on his chart as well. And it's like I always say, if you're not 100% sure you're reading the price action right, just sit out. And he did the right thing. He wasn't sure, so he didn't take the trade. But then you see it work, and you start questioning yourself. But a lot of times entering this middle, you'll get trapped and get stuck. And so, he by sticking to your guns and missing this, when you can't let the fact that it went without you throw you off. You just got to say, okay, I did the right thing. The trade worked out, but I know a lot of times it won't work out. So I hope that makes sense. I guess what I'm trying to say is anytime you aren't sure, you help me say this over and over, anytime you aren't sure, 100% sure you're reading the price action right, just don't take the trade. Another one will set up in a moment, and you see you got another chance to get long up here on some more traps. I think the only reason this one didn't trap a lot of people is because most people realize this is a range and they're thinking short, and you can see they all got short right here, and what happened? They got trapped, and off it goes. So hope that's clear. And let's see, there was another one I wanted to show. Okay, a trader sent me this. I didn't ask him if I could share this, but there's nothing on here to identify him, so I think it's all right to show this. And people are always asking me, about, if you trade one contract, I get 2 or 3 winners, then I have 2 or 3 losers, or I have a loser and it takes it all back, so you can't make any money. Well, you can see here he's trading singles and he's making profits of $50 a scalp, and he's got some losers in here, and they're definitely most of the losers are bigger than his winners. But over a period of time, he starts down here on, 4/28. So on April the 28th, he's starting right there, and by May 21st, not a full month, he's made $775. And he's had 1, 2, 3, 4, 5, 6, 7 losers. And I think if I read his stuff right, a couple of these smaller losses are where he just got shook out and the trade might have even worked. So it's just more proof that, you can just trade singles and just shoot for $50 a day starting out. And I want to read what he says here just so it all pulls together. But it says, Mack, I know this isn't much, but wanted you to know that I'm making a little progress. I don't trade very much yet and pass on many trades that I identify until I get my confidence up a little more. These past 3 weeks have been encouraging, and wanted to say that your daily recaps and videos in the premium member section are extremely helpful. The 4 trades that show 0 profit are the ones that I entered and then decided I'd made a mistake, so I just exited at break even. I'm working hard here to get more comfortable with your guidelines and feel that I've learned something new almost every day. Thank you for your hard work on our behalf. Regards, and I won't say his name. But he's making progress, and here's something to prove it. And, people say you can't scout for a point and use a 2-point stop and make money. Well, here's a guy that's learning and doesn't take all the trades and is trying to pick and choose and find a good trade every day, and he's doing it. So actually he had some, he's out at break even on 1, 2, 3, 4. He's got 4 or 5 trades in there where he was out at break even. So, of course, obviously he's not showing his commissions in here, but you figure if there's 37 trades there, 37 times, and let's just say he pays $350. I don't know what he pays, but that's $129. So you can knock off $129. So he's made 600, close to $600+ here, close to $700. So very good. That's just trading singles over not even about a 3-week period. He doesn't even have a full month there. So if you could do this, come in and take a trade every day and make $1,000 a month working for an hour or so, I mean, that's a good start. I know that, you're not getting rich and you're probably not making a great living, but I know a lot of people that send me emails that say, hey, if I could just make $50 a day, I could live great because I don't have any expenses. I just need spending money. And so it can be done. But if once you can do that consistently, make that $50 a day over and over and over, then eventually you can make $500 a day or $1,000 a day or even $5,000 a day. It can be done. It's all based on what you want to do. And I get people that contact me and say, why don't you trade 100 contracts at a time? And it's not worth the risk to me because I don't want them. I don't need to make that kind of money. I make enough money trading the way I trade, and why be greedy? Because if you try to get greedy, and not everybody's motive is greedy, some people's goals are just bigger than others. And I live comfortably, and I make a good living, and I'm in the, if you make over, uh, if you make over $100,000 a year, you're in the top. I forget what it is. You're in the top 20% of all income for all households in the United States. And so if you're making 100 grand a year, you're doing well. And I'm not saying that's what my target is or what I'm trying to make. I want to do better than that. I'll be honest with you. I want to be better in the top 20%, but I don't have to make $5,000 a day, is what I'm saying. So I don't need that kind of money. Would it be nice to have that kind of money? Yes, but I don't want that kind of stress. At least not now. My goal may change later. I continue to get better at this every day, and I tell people that. That's what's so amazing about learning to read the chart is that you think you will get to a point that um, you'll kind of reach your peak, so to speak. But I still get better at this every day. It amazes me. Sometimes I look at certain weeks or certain months of my performance or a certain quarter, and I'm thinking people won't believe this, and they won't believe it because they can't do it. But trust me, it's possible. And I have that conversation with other winning traders, and we laugh about it and we joke about it that they'll send me their performance and see if they beat me for the day or whatever, and and then I'll send them mine. And lately, this person has actually beat me a couple of times, and and we'll always joke that hey, that's not possible. You've made that up, or somehow you fudged that, or and we just laugh about it. But it's an inside joke, but this can be done. So I guess that's what I'm trying to say. And I'm on my soapbox today. I've tried to stay off of it lately, but I like to get on my soapbox every now and then. And I do think this stuff is interesting too. So I have one more chart I want to show. I'm going to pause it and put this one over here, and just to show you some more good positive thinking here. Okay, this trader sent me his chart, and this was the point we talked about yesterday. And this is a good example of looking at repeat kind of type patterns. But he said I was also going to take a short here, but notice this area as price was hesitating and decided not to take it. I even drew a resistance line before price even started to bounce from that area. So in other words, he must have found his line up here and drug it down. I think that's what he's trying to say. And so he found, wait, hang on, I even drew a he's talking about resistance line before price even started to bounce from that area. So I guess maybe he's talking about the midline then, not this line here. But he noticed that this looked similar to this. And it says, how far to the left is too far to look at is the question. Not really sure. I was reading price action pretty good today, and I told myself that this might make it a bad trade to short from this point. It was, and it did exactly what I was thinking. Luck maybe, or is it the growing experience that I am getting? Would like to think it's the two, or should I say, need to know, is it luck and experience? Is it luck or experience? I think that's what he's trying to ask. And maybe it's luck. Look at on your chart. If you took that second entry short, you're going short below. Your chart looks like mine. You're going short below a very bearish bar right on the EMA. That's a horrible decision. So you have to wait on this bar, and then it's not bearish. It closes back inside. But even if you were going to take it, you never get the trigger. So his chart was like mine. The second entry never triggered on his chart. So actually, I take that back. On my chart, I think I can't remember what it looked like on my chart. Let's just go back and look. Here it is right here. Yeah, see, my chart looks exactly like his. There's the, maybe this is historical data though, I'm not sure, but I think mine looked like this and it never triggered. So anyway, it's hard to say now. I'd have to go back and look at the video. If you want to clarify that, go look at the video and see what you see. But very good. He noticed it, and he actually maybe this is this my chart from yesterday? Maybe he took a picture of my chart. I don't know if this is. I don't know. He didn't send me enough details, but his chart looks a lot like mine. Of course, he may have loaded historical data, and I loaded historical data, so they may look exactly the same now. But his lines look very eerily similar to mine. I'm thinking this is a picture of my chart. So yeah, notice that mine never triggered. But anyway, he's giving me his thinking here, and he's looking at by looking over here, and the difference, the main thing that you really need to consider is that the bias is up. Even though you got this working down, what I think happened in the end is we had a failed break out of a trading range. The bias was up. We traded up into this range. Normally, when prices succeed on the breakout, they're going to go higher, which really they didn't. They just got back in the range, and then we broke out the other side, and you get back in the range. I can't remember, did we close? All right, let's look at this one more time. Did we close higher yesterday? Yeah, we ended up closing higher. So we broke out of this range, broke out, got back in it, and ended up closing higher. And that was the bias. And so what I think happened was this was just a failed break lower, and more people will probably recognize that than recognize the channel going down. And for a lot of people, this setup was not a very good one. Others it was, because I saw the chart where it was a great looking setup based on the way his chart looked. So, sometimes trades just fail. Not everything is written in stone, and you'll hear me say that quite often, and that there may not always be an explanation. All I can tell you was when this turned down and then turned back up, with this having been a breakout out of a trading range, you can bet we're coming back to test this area right here, and that usually will happen. You'll get a test unless it's a runaway trend. Now, if this would have been a runaway down day, looking at this short would have been totally different, because somebody else actually sent me an email today, and he asked me that same question. He says, why was this such a bad entry here, but over here, I think what he was asking me, I don't know if it was about that exact trade, but he's saying, I think he wanted to know about this long. He was scared to take this long right here because it was so close to the high. And he wanted to know why the other day he took a trade right there, but it failed, and I scolded him for going long right there. But what you got to consider is the type of day. This is an up day. Look at the EMA. It's been pointing up all the overnight, all morning, and it's pointed straight up. You got a trend that's working up. You got this line that it's, and then there's a trap in there. So, but if this was a range day like today, just like here, I told you don't be going long. Right, be careful going long right in here, so close to the highs. Then you get a trap, and then I like that one because of the double trap. You got a failed second entry short, and then it tries to go lower again and fails and bounces right off the trend line, right off the EMA. It's still close to the top, but so you might use uh, a limit order, but even if you use a stop here, it probably worked. But that's the difference. That's why I didn't tell you to go long right here off this one, even though it's still in the channel hadn't really been broken or anything, but it's just too close on a range looking day to go long. So that's the difference between why sometimes you can go long at a high and sometimes you can't. You gotta understand what kind of day it is and the bias of that day. So I hope that makes sense. But one other thing I'm going to show you, we're already 30 minutes here, but I'm not going to worry about it. I talked about this in a video a couple of weeks back, but somebody else sent me the same thing today. Said he, obviously hadn't seen the video, and he's recommending the same identical thing. So I'm going to show this again. It kept him on the right side of the trade right here, but sometimes if you're having a hard time getting your trend lines right, go up here and just click on this little bar style box and switch to line on close, and look what it does. It gives you the closes with a line, and then draw your trend line off the first two swings, and that would be there, or you might have called it right there. But if you use the first two swings, it's right there. You just draw your line parallel to that line right there almost, and then copy it and drag it down to the lows where it fits. Kind of fits the best right there, and then go back to your candlesticks and look how that's holding prices right there. You get the break and then the move to a new low. And so he was real impressed that he was able to do that and make it work. Let's just try a different one here. Let's move our lines here and try it on this one. It doesn't, I like drawing them with my eye better because I like to draw it. There's your first couple of swings there. So let's draw it right off of those. And look how it meets those other closes right up through there. Copy it and move it over here to where it kind of fits the best, maybe right there, maybe. And then let's go back to our candlesticks and look at that. Yeah, it's working pretty good. So it gets you, it's not exact, and then maybe you just take it from there and adjust it a little bit, like so. So that seems to help people. I don't like it because I can get it better when I've got the experience to eyeball it better. So, but if it helps you, if you don't have that experience yet, use that line on close. So that's the second person that's told me they're doing it that way and they're having success with it. So, if it works, try it and see if it works for you. And you can see we got the break of our bigger channel here, and we're working on a retest now. Will we get a new high? I don't know, but that's what I'd be looking for. Unless you get a trap and it turns and goes lower, I'd be looking for a retest with a new high here. So, and probably a measured move as big as this range up to wherever it was, 80, 96 and a quarter or whatever. So anything could change. We could fall low, turn down and get back in the range here and finish in there, or we could turn and go straight down. But based on my experience and what I'm seeing, for now, I'd be looking for a retest with a new high and us maybe even getting to 86 and a quarter. So, don't trade on that. Follow the price action. You can do this just like I can do it, or anybody else can do it. So it does take experience and time, though. So this is a long video, about 35 minutes, but I think there was some good stuff in there. I hope it was helpful to some of you, and I hope you could learn from it. But I'm going to wrap it up, call it a day, and get out of here early. It's almost lunchtime here, so I'm going to be out of here by lunchtime today. My kids are out of school now, so my daughter wants me to take her somewhere this afternoon, so I'm probably going to do that and enjoy an afternoon with her while she's out of school. And we'll be back to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.